Hello, this is Ahura from OTED Markets. We'll be with you to have a short outlook on the global economy in the week ahead, which is going to be the week 38 in the 2024. As always, let's first check what we had last week, and then we can see our expectation from the week ahead. Last week, the main data and the main focus of the market was the U.S. inflation and labor market data. Inflation on Wednesday in the United States consumer inflation published, and we saw that the CPI increased by 0.2% on monthly scale, as it was expected, and in the annual scale, it fell from 2.9% to 2.5%. But the question was about the core CPI. The core CPI increased by 0.3% on the monthly scale, which means that in the annual scale, it was steady at 3.2% in August. These data means that inflation is still sticky, and we should not expect to see that fast falling of inflation. Right after that, the CME Group FedWatch Tools shows only 30% chance for 50 bps rate cut. But next day, on Thursday, when we had PPI numbers, which again showed that the PPI and core PPI both they increased by 0.2 and 0.3% respectively, and both of them 0.1% more than expectations, and again confirmed the same norm, same habit, same condition for the inflation that we had on the previous day. But at the same time, we had the labor market data, and the labor market showed that unemployment benefits in applications for unemployment benefits increased to 230,000, a little bit more than expectations, but still it's more than expectations, and they showed that somehow the cooling in the labor market and labor data that caused, and the general numbers around that caused the CME Group FedWatch Tools for 50 bps rate calls shows a 50%. Up from 13% to 50%. So now we have a 50% chance, same as you can see here in the chart. Now we have a 50% chance for 25 basis point rate cut and 50% chance for 50 basis point rate cut. Anyway, I will talk about that later about the next weekend expectations. But for now, let's see what we had last week. Last week, out of the United States, we had very important data from China. On Monday, the data out from China was showed that inflation increased by 0.6% on the annual scale and only 0.4% on the monthly scale. Both of them, they missed the expectation by 0.1%, showing that still the markets in still the labor consumers in China, they are not so much into spend your money. Later on Tuesday, we had import and export data. Trade balance was amazing, but mostly because of increasing export and shortfalling of the import. Export was the main reason, because that it was the last month that the Canadian they could import the Chinese e-vehicles without new tariffs, but that's why increased the export from China to Canada so rapidly that increased this number. But at the same time, shortfalling on the import data showing that the factories in China, they are not so much in buying the new products, new materials and new raw materials, because they do not expect so much fall and expect so much sales and expectations. That's why we should be worried about the Chinese economy in the next months, and that made us to be a little bit worried about the energy market as well. Later on Saturday, we had another data from China showed that industrial production increased only 4.5%, a little bit less than 4.7% expectation, and lower than 5.1% increase in previous month. At the same time, we had the unemployment rate increasing from 5.2% to 5.3%. Generally, the data from China, they were not so optimistic. In line with the OPEC, and that caused the OPEC and IEA, International Energy Administration, to cut their expectations for the oil demand for next year, and that put a little bit more pressure on the oil market. I will talk about the oil market on the chart when we go later forward. But at the same time, we had another data from China. The Chinese data showed that the new loan given to the small businesses and the consumers increased to 900 billion, up from 260 billion in July. That shows the reaction of the market to the last month's rate cut that we had. So that was the reaction. Last month we had a rate cut in China, and that helped the Chinese businesses and the consumers to be able to get more loans, which can be somehow positive signal about the Chinese economy. On other markets, we had the labor market data from United Kingdom. Unemployment rate was steady at 4.1%, while GDP was flat at was flat in July, and manufacturing production fell. And on top of that, on the labor market, unemployment rate fell from 4.2% to 4.1%, but average earnings also fell from 4.6% so deep to 4%. That shows that inflation in United Kingdom can be more under control. But that was the most important data that we had from economies last week. On the other part of the world, it was not so huge week in Russia. Just I have to mention that the central bank, while it was expected to hold the interest rate at 18%, increased it to 19% after 2% increase, which we had last month. The most reason was because of supporting the Russian ruble, as it was again started to falling against US dollar. So this rate hike helped the Russian ruble to a little bit increase and gain some rules against its rubles. For the week ahead, it's going to be the banks weeks. It's going to be the central banks week. We have a central bank meeting in United States, United Kingdom, China, and Japan, and Turkey. In United States, which is the most important event of the week, Federal Reserve will hold its interest rate decision and monetary policy meeting. We're expecting to see 25 basis point rate cut. Now, yeah, given the chance of 50-50% for the 25 basis rate cut and 50 basis rate cut, but I do not personally see any reason to have a 50% rate cut, especially now, because the economic data, they are mixed. They are not supporting, even thought the economic data, they are not supporting the 50 basis point rate cut. But however, even if economic data support the 50 basis point rate cut, now we're so close to election, and cutting more than 25 basis point can be even it's not fairly to say, but some people, they can say, oh, that you're going to manipulate the election that we have right away, and that's the political that can enter the political tension. So that's why the central bank will try to stay out of these political tensions, and not cutting the rate by more than 25 basis points. But if they cut the interest rate by 50 basis points, I do even personally can say that, they may know some political background in their mind to do something to support the democracy before the election. That can even be the probability. But if it happened, it can be somehow political, because we had the same experience in Australia. Australian, they had almost same data, and they cut the rate by 50 basis point. And they saw, wow, that was stupid. I'm sorry to use this word, but it was exactly the same in the economy. That was very bad, and they again started to increase the rates by 25 basis points to somehow balance the economy, and that ended not good. So we have this experience. We should not go the wrong way that the other central banks did. If 25 basis point, the market already priced in, that can support the US dollar and put the pressure on the stock market. On other parts, on Thursday, we have a central bank meeting in United Kingdom. United Kingdom cut the rates previous meeting, and this meeting we are expecting to hold the rates at 5%, as to see the market reaction to the rate cut that they had the previous month, especially after the data that showed that, right now in United Kingdom, we have a very mixed data and economy from labor market, from economic activities, both in the service sector and production section. Both of them, they show that there's some mixed data, which can bring the policymakers to that step, that to be a little bit more cautious about what they do and what they decide. That means that probably will end to the not taking any action in this meeting, and hold the rates at 5% at the current rate, and let the room to the market, give the more space to the market to move forward and show what exactly it wants to do. And then central bank will have a time to cut the rate in the next month. On other places, next day on Friday, we have central bank meeting in Japan and also central bank meeting in Japanese central bank meeting is on Friday. On Friday, we have a central bank meeting in China. And also BOJ central bank meeting in Japan as well. In China, the PBOC is expected to hold the rate at the current level, which is exactly the same expectation we have for Japanese central bank BOJ also. The BOJ also supposed to hold the rate at 25 basis 0.25%. China finally had some movement in the inflation last month. Even it was less than, even thought it was less than expectation, but the previous month rate cut can support the consumers to spend a little bit more, and we have to wait and see the market reaction and the consumer reaction to that decisions and see what they can do. Most probably, we will not see any changes in the interest rate or any other policies, monetary policies of the central bank, Chinese central bank, in this meeting. But still, for the next meeting, the door will be open. In China, that was in China. In Japan also, central bank increased the rates 2 months ago, from 0.15% from 0.10% to 0.25% by 15 basis point rate hike. This meeting, the central bank expected not taking any action, but they can probably show the signal that they are ready to hike the rates in the next meeting if the inflation continue going forward, which is expected to be happen. And that's why we are expecting to see the Japanese central bank to start increasing the rates, not from this meeting, but from the next meeting for sure. That's what we can say based on the data right until now, until today that we had. That's the most important thing data that we're going to have in the next week. But we have other data from the Canada. We have retail sales data and from the Canada, which is expected to show the weakness in the data and support the Canadian central bank to cut the rates in its next meeting. The same weakness we can expect in the Canadian housing market as well. In United Kingdom, we have inflation data. We're expecting to see the inflation to stay steady at 2.2% as it was last week. In Eurozone also, CPI expected to stay at 2.2%, down from 2.6% that we had last week, and core inflation supposed to fall to 2.8% from 2.9% that we had last month. Generally, the data from the other economies, they're supposed to show some resilience in the market, and most probably these numbers cannot make any specific changes, but central banks meetings, they are the main market player. Let's check the data, let's check the chart and see what we are expecting to see in the chart. That's USD JPY chart. The Japanese yen against US dollar gained some rooms against US dollar, Japanese yen, and we're expecting to see this downtrend of USD JPY, which means the stronger yen against US dollar. That's expected to continue and see the Japanese yen in around under 140 against US dollar. So generally, Japanese yen expected to see some more support, but on the other hand, Japanese stock markets, they are not going to welcome this condition and this decision. About the pound sterling, pound gaining some strength against US dollar and other currencies, and since we are expecting to hold the rates in United Kingdom while we're cutting the rates in the United States, we are expecting to see GBP USD to continue the current uptrend, and most probably we can see higher numbers in GBP USD as we are expecting to hold the rates in United Kingdom. If happen vice versa, their expectations also can be changed. US dollar index. As for now, this number shows the possibility, the reaction of 25 basis point rate cut. the 100% 25 basis point rate cut. If we see the 25 basis point rate cut, we can see a story around these levels and higher. But if any case central bank in the United States cut the rates by more than 25 basis point, around 50 basis point, then we can see a star index to fall from these levels, and vice versa can happen for the stock markets. US stock market, if they cut the rates by 25 basis point, will fall short, and if they cut the rates by 50 basis point, they can increase. It can increase higher from this level. So it's depend on what central bank is going to decide in its next meeting. That can be same for the Nasdaq. That can be same for S&P 500 or Dow Jones. Doesn't matter. All of them, they can, all these main stocks, they can show the similar reaction to the decisions from the United States Central Bank or Federal Reserve. On the other markets, if we go an oil market to look at the oil market, economic data, they are not supporting to farm oil market, but the geopolitical tensions are still increasing and still they are there. That support the oil price. So we don't, based on the weaker than expected economic data, we don't have too much rooms to go higher for oil market, but for oil prices. But on the other hand, as I told, the geopolitical tensions also, they will hold oil price back to fall more down. So for now, for the short term, we are expecting to see higher numbers around $70 and a little bit higher. On the gold market, we talked too much about the gold market this year. We were expecting to see the gold in a much higher levels, and we are expecting to see that in much more higher levels as well, and continuing this uptrend. Even thought in the short term it can have some correction, but still the general trend is still uptrend, and we're expecting to see higher numbers. On the cryptocurrency market, Bitcoin shows some reactions to the data we had and showed nice increasing. If we look at the chart and if we see the Fibonacci levels from the latest, the last higher high that we had and lower low that we had, if we draw here the Fibonacci retracement levels, we can see that it's clearly trading above its 50 basis point rates, above its 50% level of the Fibonacci. If it crosses above the 61.8%, which is around $60,200, then we can say that the doors can be open for much higher levels around $65,000. But if it falls under 50%, which is sitting at 58,888, then it can open the doors for 52K and 47K later after that. That's the general market condition and our expectations. If you had any other question and more question, don't forget to write down in comments. I will try to get back to you as soon as I can. Have a good time. Bye.